Hello, South Bay. It's May already, and we're halfway through the second quarter and just entering the spring buying and selling season. The real estate market has and is changing, sometimes daily. Let's first look at the numbers and then stick around to the end to find out what those numbers might mean and how they might affect you if you're thinking of buying or selling a home this year. Let's look back in April since that's our most complete data. These are median estimated home values around the South Bay. They range from $613,000 in Wilmington to about $3.92 million in Rolling Hills. As expected, we see a little more red on the map. We are getting closer to comparing today's values with the absolute peak of the market, which happened last June. We expect a little more red next month as we compare to those very peaks of the market, and then expect things to start turning green again as returning buyer demand has put pressure on prices to stay steady and even climb in some areas. If you want to know what your neighborhood is doing, or if you want to find out what your home's worth right now, type free report in the comments below and I'll send you one out. Just to give you an idea of the range of homes that sold in April, they range from this 1-bedroom, 1-bath, 659 square foot condo that sold for $361,000 to this 5-bedroom, 8-bath, 7,200 square foot home with a pool and a basketball court on a 12,254 square foot lot that sold for $14,500,000. Hello everyone, Steve Yuta here from HousesInSouthBay.com, bringing you the South Bay Real Estate Market Report for May 2023. Now, please remember to do all the online stuff like commenting, liking, and subscribing. It really helps me with the algorithm, but most important, contact me if you have a real estate question. I'm here to help. Now, we all know what affects changing prices most is supply and demand. So let's take a quick look and see what's going on. On the supply side, we had 618 active listings in April. That's in the whole South Bay area. Of the 618 homes in inventory, 385 are new listings on the market in April, which is down 25.5% from a year ago. Let's look on the demand side. We can see that showings are up again, even higher than they were at the peak of the market last year. We had 279 homes sold in April. We also had another 272 homes pending, which means they have a signed contract, but the sale process has not completed yet, so those numbers will be in future months. We can see that we have a fairly tight market. Now, the average days on market is 30, with half those homes selling in less than 12 days. Now, that seems like a lot because we've been used to such fast sales during the pandemic, but as you can see, it's just getting back into pre-pandemic normal range. Now, one very important number and a way to visualize that balance between supply and demand is best shown in our inventory months of supply, which is at about 2.1 months of supply right now. So if no new homes come on the market, we would sell out of homes in about 9 weeks. This is the number that gives you an indication of where the market's going. So even when the numbers out there are a little crazy, we can look at this and see how things balance out. With only 2 months of supply, we're still in an upward long-term market. Now, there is no crystal ball, but we see no indicators that home prices will soften much further unless something drastically changes in the economy. We just don't have enough homes to meet the demand under current conditions. We're seeing multiple offers on correctly priced homes. Now, I mentioned at the beginning what these numbers may mean for you. Well, for sellers, demand for correctly priced homes is still high. But when I say correctly priced, I don't mean discounted. Use the data for your neighborhood and position your home to attract the most amount of buyers to have them compete against each other. Pricing your home correctly will get maximum buyer competition. Also remember that in this market, preparing your home for sale can make a big difference in the sale price and how much money you put in your pocket after closing. Now that can range from simple decluttering to doing some deferred maintenance, simple repairs, or even some renovations. We are also seeing staging making a big impact on sale prices lately. So talk to your realtor about what might be right for your home and neighborhood. Talking about realtors, you need an active and aggressive agent to market your property to the most potential buyers. One that keeps up on the market trends and data, like doing market reports, going out and looking at homes. Now, if you're looking to maximize the value of your home, reach out so we can put together a plan that's right for you. And for you buyers, it's actually a pretty good time. Buyer demand and competition is rising, but prices haven't jumped up yet to reflect that demand. You can take advantage of this. We believe that prices will continue to rise in the long run, so it's probably a good time to buy before they go up any further. If you have concerns over uncertain interest rates, give me a call and let's talk with the lender about all of your options. In fact, most lenders I'm working with right now will refinance your loan for free for the next several years if rates go down. Just remember, do what's right for your family's budget and needs. But also remember to look at the long-term benefits of owning instead of being at the mercy and uncertainty of renting. Rents will continue to rise as long as we have inflation and a housing shortage. But when you buy your home, your monthly mortgage is locked in and will not change. Now, no matter the state of the economy, you still need a place to live and build memories with your loved ones. Would you rather be doing that while paying off your home or paying off your landlord's home? Let's talk about your real estate goals for the year, so please send me your questions on buying, selling, or investing in real estate. I'm here to help. Bye for now.